Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, June 14th, 2011 is brought to you by Realtic. Alright, guys, let's take a look at the charts. We have a lot to discuss today. The markets are having a fantastic rally day. This is exactly what I called for into the end of last week on Friday and on Monday. I kept on saying, listen, they are going to rally this market. Why? I'm going to go over the reasons right now. But right now we have the Dow Jones Industrial Average up 140 points, Nasdaq up 41, S&P 500 up 18 and change on the day. Basically 1.5% rally across the board. Volume's a little on the light side for such a great rally, but that's not surprising at all. But again, let's focus in on what the charts are telling us. Why did I have a rally penciled in for this week? Bottom line is this, all right? You had options expiration on Friday. I mean, that's coming up here, folks. And remember, the options are notoriously sold by institutions. Institutions charge a premium. All right, as long as they don't lose more than their premium, they're okay with it. Now, granted, they always want to profit that premium, but listen, it's not always going to happen. Bottom line is, with the selling over the last month or so, in the last 6 weeks, the massive selling in the markets, these institutions are getting nailed on these option calls, which again, majority, because the retail buyer is buying puts because they're bearish, they're getting crushed on these. So they have a vested interest in seeing a rally in the markets to get those options to expire worthless, or at least so they can break even or make a little bit of profit on the premium that they charge. That's number one. Secondly, you have to understand that you've had 6 straight weeks down. If you've taken our methodology webinar, you know that price is in a move up for this current week, which is happening. In addition, if we go to the Qs chart, take a look at the Qs chart, which is the Nasdaq 100. Look at the hit yesterday at the 200. You know this thing after such a big fall, there's no way this thing's getting below the 200 without a bounce. Therefore, you look for a bounce off the 200. Beautiful chart set up there on the Qs, and that bounces beautifully higher. In addition, last but not least, the retail information on today's economic reports were obviously going to be better than expected. Why? Well, if you look at the charts, and again, I'm not going to go to the retail charts, we're just going to go back to the intraday SPY charts, but if you think about it logically, the negativity out there is pricing in very, very poor economic news. The retail sales numbers that were reported at 8:30 this morning, they would have had to have been absolutely horrible to cause this market to go down anymore. And they came in average. They were just average. They weren't great. In a bull market, markets probably would have sold off, but because we've been crushed so much, the markets were going to get a bid. So, I mean, everything was pointing to a bounce. We analyzed it. We took trades based on this analysis, and sure enough, today we are profiting. Morgan Stanley, guys, nailed this beautifully, buying it last week down here. I took and sold today at a $23.45 from an entry of $22.40. I took a $1.05 profit on this move up here. And again, these alerts are posted in the research center in the hot charts and alerts, and we send out alerts when we buy and sell trades and post anything new in there as well. The research center includes everything listed at InTheMoneyStocks.com underneath that research center, and you can take a 7-day free trial. I mean, just think if you took the 7-day free trial last week at some point. Here you're banking thousands and thousands of dollars on a service that is free right now and only costs $50 a month afterwards. All right, in any case, beautiful move up there. I love how we sold it today at the open, and then it's reversed since then. That means we exited at the appropriate time, and that is just a beautiful thing to behold, folks. In addition, I just sold half my position in MOTR for $8.30 per share. That was from my entry of $7.55. I put out an alert last week. That's a 10% profit. I sold half. I'm going to hold the remaining half for a move up to this pivot high right here. And again, with a break-even stop on the second half. So that's what you're doing here. Money management is number one. These are just 2 of the many trades that we're in right now. We have other trades that we're in right now, which is GE. GE having a beautiful bounce. Our entry price was $18.33, which was right here on a pierce of the 200. We're now up on that trade beautifully. And other trades as well, guys. Take a look at WFR. And this is a great one to discuss because WFR is having a big bounce. Friday, a lot of people were wondering, they got downgraded. All right, WFR got downgraded on Friday, and it came down and actually sold off, but then rallied back towards the end of the day, creating a little bit of a bottoming tail. And I said to the guys in the research center, I said, listen, as long as we don't close below that bottoming tail, this is actually a beautiful chart setup for a move higher. Well, today it gets upgraded. Now, you tell me, what idiot in the analyst is going to downgrade it when it's at its 52-week lows down here? Where was the downgrade when it was trading up here? I mean, think about that. Where was its downgrade up here? Where was its downgrade up here? Where was its even downgrade right here when it was at 10, $11 and when it went to $8.50? It was nowhere. Anytime you see an analyst downgrading, folks, at a low on a chart, at a 52-week low or so, you must think of it as a great reversal signal, and when the amateurs sell on that downgrade, you are a buyer. And if you bought down here or anywhere in this lower range, the stock has rallied back. Oftentimes, and I'm going to throw this out there, folks, oftentimes when you get a downgrade at a 52-week low, what the institution is doing is downgrading on purpose so they can be a buyer. So it's actually a little bit of an ethical quandary, in my opinion. It shouldn't be allowed, but that's what happens. And then ultimately that puts the bottom in on the chart. It's a beautiful thing there, guys. I have to say, a monstrous thing right there. WFR getting upgraded today after it was downgraded on Friday, and it really makes no sense. We were a buyer down here, and that's what you had to be doing. If you were selling it, you're getting caught up in the Wall Street shenanigans, and you should be ashamed of yourself and look to do the right thing by joining InTheMoneyStocks.com, where we will keep you and give you insight into all the keys that you need to do to make sure that you profit here. In any case, I thought that was a really fascinating little situation, how it got downgraded here on Friday, and that's actually the low now. And I called for that as well. I said, guys, downgrades at the lows are usually the bottom. Sure enough, up it goes today, up about 5+% on the day. All right, so those are just a little few tests of a couple of the different trades out there. I also put a Caterpillar on the Pro Trader watch list bullish side yesterday. That stock is up $2.38. Broadcom was on there. That's up $1 basically. Great bounce on Broadcom. That was oversold and looked like it was going to get a bounce as well. A lot of good stuff out there in the research center. And again, there's a free trial for 7 days. Now let's get into the spiders and discuss exactly what's going on here. Number one, the markets are getting a ginormous bounce. This is the daily chart, but I want to more discuss the intraday. The intraday was a perfect river theory. For those of you that have been with us at InTheMoneyStocks.com, you know I use the term river theory very often. Now, a river theory, again, is a gap up above multiple levels. In this case, you gapped above the 20, 50, pivot top right here, and above the 200 right into this green trend line. You closed above the green trend line. That's a huge river theory. It tells us chances are you're going to have a continued move up, and I called that out right at the open today, and sure enough, you went right into this gap fill. If I zoom out a little bit, please note the gap fill from right here. I called out a short play right there, got filled myself at 129.43, and it came all the way back down beautifully. And look at that fall there on a little scalp short. So the scalps are there, the swing trades are there, it's all for the taking. As we moved up back into it, it stalled out again. Now it's actually gone above, and now it's pulling back. But either way, this market is in a rally mode, which is exactly what we called for. I called the financial bounce and the financial bottom last week. We all know that that's had a huge move up. Take a look at Goldman Sachs off my call last week, folks. This was the call right here when I said bottom in financials right down here. And look at that move up. I mean, it's just been an amazing move. Bank of America. I mean, look at this reversal up here. It's been a thing of beauty. And again, the calls will just keep coming. Again, I'm neither a bull nor a bear, frankly. I couldn't care less if someone's bullish or bearish. I'm going to trade the charts. And because of that, we keep our 90% success rate intact on all trades. In general, we will make money on 90%. That's 9 winners out of every 10. Go find me someone else that does that, and maybe I'll believe it. All right, but again, we have the archives. You can go to the Hot Charts and Alerts archive and scan back, and you'll see that exact same thing, folks. You'll see the calls. And 2 more winners getting added to the pile today. GE is in the money. We also continue to look at other trades that are looking great as well. So it just continues to pile on. Let's make more money. That's what we're here for. All right, this morning in the day trading chat room, I gave out CDTI at about a level of $5.80. It ran to $6.35 within about 10 minutes of the call. It was a beautiful trade there for big money on CDTI, Clean Energy Technology, Clean Diesel Technologies. There are other trades out there that I'm eyeing for this afternoon, and there's also more swing trades. I'm looking at Chinese small caps. I'll be honest with you, Chinese small caps are bouncing now, and they're bouncing hard. Take a look at Yoku. This isn't a small cap, but look at Yoku's bounce today on this. YOKU is the symbol. A huge bounce. Look at this. Big, ugly move down yesterday, but look at the size of this bounce. $3.66 bounce today. DANG is another one. Look at that, up 220. Moby is even getting a bounce up 81 cents. Moby, a ginormous move here as well. So again, Chinese small caps are on high alert with me. I am keeping a very, very close eye on them. And again, they should continue to bounce. We've seen other ones bounce already, and there's some laggards there that we'll be watching very, very closely. All right, enough said for today, guys. Fun day in the markets. It's always fun to have some profits in the pockets. This is turning out to be a fantastic week as we called for the bounce and positioned ourselves accordingly. I encourage you to take the free trial of the Research Center or the Intraday Stock Chat and start profiting with us, the pros.